Trader Station, what is going on? I have another video for you guys. This one is of the pound dollar, and this was my pick in our weekly podcast on Sunday. We have a weekly podcast every Sunday night. If you guys haven't checked it out, please do. We start off with all mentioning a chart that looks interesting to us, and I usually come on right after that podcast and make a video of my pick and talk about what I was talking about on the podcast and just give you guys a visual here of what I was talking about in the podcast. Unfortunately, I could not get to it right after the podcast last night, so here I am getting to it today. So here we have the pound dollar daily chart, as I said, and I am focusing in on these pushes down that we're at. I really like the level that we're at. I'm going to go ahead and start drawing some lines over here and extend that to the right. So here in the beginning of September, we had our first push down, and then our second push down is the beginning of October here, and then our third push down is the beginning of November here, and now here we are on our fourth push down, and we are coming up on, what do you know, the beginning of December. So right on time for the pound dollar, and this is like do or die time. You know, this is initiation time. This is, I had a pretty good analogy, if I do say so myself, on the podcast on Sunday last night, and I described this moment as like, you know, when you and your friends are all at the bar. You know, I'm gonna pretend we're all guys. You and all your boys are all at the bar, and you know, you're ordering your drinks and you're looking out on the dance floor and you see all the beautiful women there, and one of them locks eyes with you, and she just kind of gives you that look, you know, gives you a little smile, and you know, you try to play it off and act cool. But from that point on, the clock is ticking. You know, you got about 10 minutes to make your move until you are old news. And once you're old news, it's really tough to get back into the game, you know, to find a spot to get back into the game. Because if you wait an hour, then she's probably already danced with someone and she's already talking to someone else now, and then you really gotta finagle your way in there, and it's just no good. You need to make your move as the opportunity presents itself. And here we are, we're getting an opportunity that is presenting itself to us. And let's look at the 4-hour chart. And I was just saying, you know, I am prepared to go short, even though it looks like such a good long, you know, bouncing off these levels. I'm prepared that if we're getting bear bars kind of like these closing on their lows, big bear bars closing on their lows, I mean, these are exceptional, but this is a pretty, you know, that's a big body, you know. This is a big body, you know, even though these are huge bodies. This is, if we get bear bars like this closing on their lows, closing below this level and this trend line, I am ready to go short. But if then we immediately start accumulating bull bars like we did here, I would be ready to go long. And I'm just waiting to see what we get. You know, if we look back here on this 4-hour chart, you can see it all started with, you know, 1, 2, 3 bull bars, this one being exceptional, and that's what started the rally. If we look over here, we're kind of getting like this rounding bottom here, you know, so bears aren't that aggressive. We're getting a nice bear bar here, bull body follow through. Couple of bear bars, terrible follow through. Nice bear bar, terrible follow through. These bars, big tails, weak bear bars, and here we are, we're starting to get bull bars accumulating, and then a nice big one, and then here we are, more bull bars accumulating, and then up we go. Same thing happened here. It's like the end of the world over here. Oh, this is going so much lower, and then all we needed was 3 bull bars in a row to just completely change the character of the market. And you may look at these 3 bull bars and you say, that's not enough to reverse all of this, and you are correct. But context is so important, and the context is just telling us, hey buddy, buy. We are at a buy zone here, and that's exactly what happened. And now we're starting to see, it's like, huh, doesn't this look familiar? Oh, bull bodies accumulating. So I'm actually ready. Probably after even I finish this video, I'm gonna go in and I am going to buy a small piece here, maybe like half size. And I'm probably going to be risking about 100 pips. 100 pips would get me below this trend line, and I'm looking to get to at least this 152 level. And the reason I say that is because I am aware that we are in a bear channel. I just want to maybe draw a line from here or so. Looks like it contains the price action. So nonetheless, wherever you draw the lines, if you started from up here, over here, over here, we're in a bear channel. That's the main point. And what we do in bear channels is we make lower highs. So here's kind of like the peak. This is a lower high compared to this. This is a lower high compared to this. This is a lower high compared to this and compared to this. But I just want to say, even if this was a little bit higher than this area, like it went up here, like it's still a lower high in my eyes. You know, it's a lower high than that, and then this is a lower high than this. So if this pattern continues, then you know, I like the 152 mark, because look at all this congestion. Okay, this is a place where bulls and bears were in agreement on price. Okay, and we don't get these often. As you can see up here, price was too high and we had to go lower, and we went lower dramatically. Down here, we realized, whoa, we went way too far. Now price is too low. Now price is too low, we have to go up. And up here we realized, whoa, we went too high. Now price is too high, and we had to go lower, and went lower dramatically. And now it's like, oh, we went too low again. Price is too low now, so we went high. And you guys get the picture, you know. Price is too low here. We had to go high. And it's important to look for these areas of consolidation to the left of the chart as possible areas where the chart could pause. Like here's a pretty good example too. Look at all this congestion in this area. You know, so much congestion in this area. This whole block from 157 to about, what's this, 154 even. So you want to think around 155.50 is the main congestion point. So like, you know, 155.50, 156, and then lo and behold, when we went up from here, where do we stop at? We stopped at, you know, 155.50 to 166.50, around this 156. So this point was right at this equilibrium congestion area, and we're getting a smaller version of that here, I think. So I think if we do go up, I think 152 is a decent target for the bulls. And if we are so lucky, we'll get even higher to the 153 area, and to the top of this trend line maybe. And we're just gonna have to see what happens, how the price action unfolds. Now, if I do end up getting long on this, and then I start seeing bear bodies accumulate, bear bodies like this or whatever, and we close below this level, below the trend line, I will not be scared to go short. And the reason being is because this pattern right here, these three pushes down, it's called a wedge. It's a bullish wedge, if you want to be very technical with it. And all that means is that the bears had three chances to really start a bear trend. 1, 2 tries, 3 tries. Okay, and though they did succeed, we are in this downtrend of lower highs. It's like, why can't they really get the break they're looking for? You know, the bears don't want to see these pullbacks, these aggressive pullbacks. So why are they now, you know, after the beautiful wedge we had here, it's like we should skyrocket. This should be the reversal pattern. And that is in fact not what we got. In fact, what we got was price falling below this third push down. Now that is a sign of weakness by the bears. Why did the bears allow, a sign of weakness by the bulls? why did the bulls allow price to go below this point? Okay, and but at the same token, look at this bar. Look what happened when it did go below this price. It just looked below, came back up, and created a pretty decent bull reversal bar. You know, the only thing that could have made this bar better is if it closed on its high. But nonetheless, it's still a decent looking bar, and that's exactly what the bulls wanted to see when price did go below this. You know, so bulls are still there for sure. But if we do get a break below this, closes below this, I think the bears, I think the bulls are in trouble, and I think the bears will control the market from that point. And at that point, for downside targets, check out all this. Look at all this congestion area. From around the top of this is 150, the bottom is 146, so the middle is 148. So this is a price of balance right here at 148. So if we do get that break, I'm expecting us to stop or pause around this 148 level before the market then decides on its next move. So just looking at the 4-hour chart, once again, I mean, just look at what happened all these times. Okay, we're getting this crazy downtrend. It's choppy though. You know, it's like bear bar, bull bar. You know, bear bar with a big tail. Nice bear bars followed by a bull bar. Oh, really nice bear bar closing on its low, but it had a bull bar follow through. Oh, a really nice bear bar, but it can't close below the prior bar, and the follow through was garbage. And then we get this nice big bull bar, and we start accumulating some bull bodies over here, and it's up she goes. And then over here we had like that rounding bottom thing going on, and you know, same type of thing. Oh, really nice bear bar, bull body follow through. That's not what the bears want to see after a nice bear bar like that one. Again, nice bear bar, bull body follow through. These bear bars, tails, weak looking bars, and then we're getting bull bodies after them, and then we're getting bull bodies accumulating here, and then we're getting more bull bodies accumulating here. And you know, this is a higher low at this point. So it's like whoop, up we go. So now, oh, and we got this one too. This was the, you know, just we needed a few bull bodies in a row to and some good context, and whoop, up we went, you know. And here we are again, coming to this trend line area, and the only thing I don't like, the only thing that's making this a little bit tough to pull the trigger for the bulls, I think, is that we did not touch or even like get close enough to this trend line. Like, I could draw this trend line a little better to touch those points, but it would not touch this point, and it's a little bit far away. So that is a reason where we could certainly pull back. You know, we could definitely pull back here, kind of play with this line before we make a move up, or we can, you know, pull back here, play with this line, and then just crash downward. So that's what's making it a little tough to pull the trigger. But it's like I've seen this movie before. You know, look at these bull bodies accumulating. You know, I saw that movie here. I saw that movie here. I saw that movie here. You know, so it's like I've seen this movie before, and for me, you know, I think entering here, risking about 100 pips below the trend line is just something that suits me, and I'd be looking to get up to that 142 mark, because that's where the congestion is. And if we are in fact in this bear channel, then we're probably going to make a higher low from here, and this is the 153 area. So I think a nice little higher low would be higher low, lower high. You know, we have to make another lower high if we're in the bear channel, and I think a nice lower high would be this 152 area where this congestion is. So that's one way to play it. If we are so lucky to get to 153 or this trend line, I don't think I will be holding the position that long from here. But what I will look to do is add to the position, and if I can get another place to add where I don't have to risk all the way down here like I'm risking with an entry around this area, if I can get another place to add with a good risk level, then I'm going to add, and I'm going to look to swing that one for even more, and be a little bit more aggressive with that. But for this point, I think if you enter around here, and you're risking 100 pips, you're looking to get up to the 152 area. It's only about 150 pips, so it's not really quite that 2-to-1 risk reward, but you know, I really like the context, and if you win a bet like this 60% of the time, then you are profitable with that setup. So it's all up to you. Some people are probably going to say, no, I want to wait for the pullback, but for me, it's like I want to pay. I want to pay because I could be, and I want to pay and pay to see if I'm going to be right, because if I am right, I think we're gonna go whoop, you know, whoop, just like we did the last 3 times here, whoop, right away. It's like if you enter here, you took no heat on your trade the whole time. You were in profit the whole time. If you entered around here or around here, you're in profit the whole time. If you enter around here, you're in profit the whole time. You are not sweating at all. Not like you should be sweating when you're into trades, but you know what I mean. No one likes to see a trade go against them. And we could be setting up for something like this right here, where if you enter here, you would have took no heat going up. So that's what I think makes the bull side the higher probability. Just remember, higher probability in the markets is like 60%, you know, 60% in your favor. It's very tough to get a probability that's higher than 60% in your favor. So nonetheless, I really like the context here, and you know, just remember, if you do enter and then you start seeing bear bodies accumulate and we start closing below things, and you know, you get stopped out in the process, you know, don't let that discourage you, man. Like the market's still there. It's still, you know, the market doesn't know that you're in a long trade or that you're in a short trade. All the market doesn't try to make you angry. So therefore, you shouldn't get mad when the market does something. You should say, oh, I thought it was going up, but now the information is telling me it's going down. So, you know, sometimes the best thing to do is to reverse. And I know reversing is very difficult. It's tough for some people mentally, but you just have to take the information that the market gives you is not supposed to hurt you. You know, you're just supposed to say, oh, you know, now it's doing this, or oh, now it's doing that, you know, and it can change. It can change on a dime, but take the information that the market gives you and literally run with it. Don't let it get you angry. So, guys, if you haven't listened to the videos, the podcasts, please check them out. You know, we're getting better. The topics are getting better. The way we present ourselves and talk on the podcast is getting better. We've got a lot of new things in store for you. We're going to start having some special guests on the podcast, other successful, profitable traders to talk to you guys and just give you another view. You know, it's awesome to hear from all different types of traders, and that's what we do at the Trader Station community. You know, us four, we're all like a little bit different in our styles of trading, and we trade different products and such. So I hope you guys are really enjoying the content that we're giving you, and we've only got more to come. So I hope you guys enjoyed this video, and you know, email us if you have any questions. You can email info@thetraderstation.com. You can also email me personally, traderstos@gmail.com, traderstos@gmail.com, and just let us know what you're thinking, or any questions you have, and that's about it. So thanks for listening, guys, and until the next video.